James from Money20 here in Amsterdam. I'm with Vatsa Narasimha, CEO of ComplyAdvantage. Vatsa, thank you for your time this afternoon. My first question is a very basic one. As your stand indicates, ComplyAdvantage is the leader in AI-driven fraud and AML risk detection technology. Could you explain a little more about what the company does and who are your clients?
Excellent. Well, Andrew, thanks for talking to me. It's actually really nice to be here in Amsterdam. Sunny day, even though you can't tell that from the interiors that we are in. So ComplyAdvantage, what do we do? Very simply, we are the leader in helping banks, FinTechs, any regulated institution figuring out if any client of theirs is a bad financial actor or not. So we've been around for about 8 years. Our founder, Charlie Delingpole, started out the company in London. We are now up to about 500 employees across Singapore, Romania, London, and the US. And our clients are leading financial institutions, from banks to FinTechs to insurance companies. And increasingly, we're also serving a lot more corporates who are keen to make sure that their vendors and their customers are not sanctioned entities.
Yes, yes. Yeah. When you work with your clients, you obviously talk about future-proofing proofing their business. So what does that actually entail?
Yeah, great question. So one of the things that the COVID era did is, I'm sure you're hearing this all the time across the event, it increased digitization.
Yes.
The number of digital transactions, everything that was happening increased dramatically. And what that has done is it has also increased the avenues for fraud. The new types of fraud that you see has also exploded dramatically. That's just one example of how the world continues to evolve. And when we talk about future proofing, instead of sort of relying on just historical behavior and assuming that all future behavior will be based on historical patterns, we also use AI and ML to help identify new patterns, new behaviors, new risks. Another way we talk about it internally is calling see the unseen.
Yes.
And so that's the way for you to future-proof your business.
If we consider now somebody who's not yet your client, but who makes the right decision to become a client of yours, how long does it take to onboard them?
Oh, not a long time at all. So one of our unique differentiators is our data and our insights and our platform can be consumed either through web-based interface, a case management system that you can use, or like majority of our clients, they consume us through our REST API. And the API integrations can vary from hours to days to a few weeks. So typically most of our clients are up and running within days to weeks to, at the outside it's a couple of months, based on what legacy systems they have and where they want to pipe the data.
And how big they are.
And how big they are, exactly.
If a bank or a FinTech is working with you, it should be easier for them to onboard clients, to make sure they onboard the right clients and not the wrong clients. Are there any other advantages that I'm missing?
Yeah, so if I may elaborate one on the duty of care.
Sure.
Duty of care has multiple angles to it, right? One, if you're from the UK, there's a legislation around this. I believe it's called customer duty legislation, but there are guidelines from where I'm from in the US. CFPB has put out guidelines. So there's a regulatory requirement that you have a duty of care, but there's also a fiduciary responsibility.
Yes.
And you talked about that a little bit around preventing losses for your customers, but there's also a reputational impact. Because you as a financial institution have an obligation to your shareholders and things, and you don't want the reputation that you've onboarded the bad actor or any of that stuff. And typically compliance historically has been viewed as a cost element, a risk element, but there's also a revenue generation element. Because it's not just we don't just help our clients prevent them from onboarding bad actors, but we also help them identify good actors fast. So you bring them on board faster and you get to revenue faster. And so, and not just during the onboarding, but during the entire life cycle. So if someone later gets flagged for being a suspicious actor, how can you resolve that quickly and let them keep continuing transacting? So the revenue generation or the revenue acceleration element is another key differentiator.
One of the things that makes this conference different from previous Money2020s is that people are talking a lot more about artificial intelligence, AI, which is obviously at the center of your business. Is AI what you've been talking about most in this conference? Or if it hasn't, what are the standout themes that you've been discussing?
So it is AI. Everyone wants to talk about AI, right? Like with large language models and everything in vogue these days, everyone wants to talk about AI, and everyone wants to talk about how is AI incorporated in your system, how can it be used. But the more subtle but the more important piece that I've found in this conference is also having conversations with clients and prospective clients is about explainability of that AI and the accuracy of that AI, right? So AI in the context of if someone wants to do a book report is one thing. AI in the context of if you want to do business with this person or this entity is a whole another thing.
Sure.
So accuracy is very important. You don't want a black box AI system, auditability, transparency, all of those things are important. So that has really been the focus of the conversation and it's easy for us to talk about it because we've been building this for 6-7 years with that in mind, and that has been a lot of emphasis. So when you talk to typically compliance officers or chief risk officers, their hesitation about AI, they're under pressure from their business side to say, hey, how can we use AI? But their hesitation is typically AI models historically have been black boxes. And so they're wanting to understand, can we understand why a certain decision was made? If we don't agree with that, how can we actually help correct it? And also, where's that audit trail so that if a regulator comes knocking, we're able to explain why a certain decision got made. And those are type of things that we have built in, and so that has been a very interesting conversation. I think in previous years it was like, okay, you have AI, you don't have AI, and now we're getting more into the meat of the conversation.
Is there a geographical aspect to your business? Or put it another way, are there parts of the world which are financial crime and fraud hotspots where your services are particularly in demand where they weren't, say, 2 years ago?
I would not say, I would say the evolution of us as a company, I mean, we started in Charlie Delingpole, our founder's garage, about 8-9 years back. So we've evolved, and so for us it's been more of an evolution of a company. We started out as more UK and Western Europe centric company, and then we expanded to the Americas and expanded in EMEA, and now we have a lot of clients also in Asia. But I genuinely think with payments, if you talk about payments, which is a big theme of this conference, or money movement is truly global. And so for us, we are seeing spike everywhere around the world, and the data backs that up too. I think UK released a report recently that in a 12-month period between 21 and 22, there was a 40% increase in instances of fraud. And then I was looking at another global payments report, which talked about global payment fraud by 2027 could be as much as $40 billion. So it's a truly global problem. And for us, it has been more about us expanding, and we now have customers in 75 or 80 countries around the world. Obviously, the dominance of it is in the US and the UK and Western Europe because those are the bigger economies. But we are seeing clients everywhere concerned about it. So one thing I'd like to bring out is sort of the partnership between banks and FinTechs or RegTech companies. I definitely like, that's been one of the other themes that I've been exploring, particularly in this conference. I think one of the things you're increasingly starting to see is people that you may call legacy bank. I like to call them traditional banking. Traditional banks are definitely in the process of exploring how to become more digital, and also they're dealing with all these new fraud typologies. So how do you bring the two of them together? And that's where FinTechs like ours can play a big role, especially because they're dealing with legacy systems and legacy processes that tend to be a little bit more static. And a lot of the conversation now is turning to where can we plug in, because expecting banks to rewrite code on all their systems at the same time is also not feasible. So it's really becoming more of a partnership,
yes.
where the banks are the experts in the space that they operate, in the products that they offer.
Yes.
They have their own risk appetite, and where we fit in is around providing better data, better systems, and better insights that are easy to integrate and hopefully bridge the gap,
yes.
and make it easier for the end customer. At the end of it all, it's about how do you reduce the burden on the end customer, particularly
yes.
there are a lot of good actors. I always think about it from the perspective of my mom. She still lives in India. She's in her 70s. And anytime the bank changes a system and forces her to come into the bank to provide more documentation, it's a burden on someone who's clearly a really good actor.
Yes.
And so how do you make sure good actors aren't penalized? And I think traditional banks are starting to and should work more with fintechs,
yes.
to figure out how they can bridge that gap. So that would be the one other theme that has come out at Money 2020.
This has been a great interview. Thank you very much
Thank you,
indeed.
Andrew. Thank you so much.